Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today we're focusing on cryptocurrency. So one of the things that we know is that the IRS is moving full steam ahead with Operation Hidden Treasure to target cryptocurrency users and people who were not reporting their cryptocurrency transactions. And, they've gone from, getting the big fish, and they're looking for just regular folks, for lack of a better term. And the reason is that they're looking to fill that tax gap, which is the gap between what's owed and what's actually being paid. And they're thinking that a lot of that money is in cryptocurrency. The number I heard is to the tune of $1 trillion. I'm not exactly sure where they got that number from, but that's what the IRS is guessing is in unreported cryptocurrency transactions. And so that's what we want to focus on today, is what are the ways for you to actually report your cryptocurrency transactions. All right. Number one is with a qualified amended return. Now, a qualified amended return means that you say, hey, I did not report these transactions on a previously filed return. You reported everything else. You did your W-2, your deductions, your small business, whatever, but you didn't report those cryptocurrency transactions. So that's when you make the decision to go and amend those returns, send that in, pay whatever taxes and penalties are owed, and call it a day. Now, a qualified amended return means you file that amendment before the IRS gets to you. If the IRS gets to you, that qualified amendment thing goes out of the window. The thing with the qualified amendment is that fraud penalties can also still be assessed, but the fact is, if you get to the IRS before they get to you, then you have a lot more flexibility than if the IRS comes to you first. All right, number two is quiet disclosure. Quiet disclosure is basically you haven't filed taxes and you just go ahead and file the taxes and claim everything and pay and call it a day. That's what that is. It's similar to the qualified amendment, except with the quiet disclosure, you haven't filed anything. You ain't filed regular taxes, and you haven't claimed those cryptocurrency transactions. You just ain't filed nothing out there all willy-nilly. So with the quiet disclosure, you go back and you file those transactions. Now, the third is the voluntary disclosure. And with the voluntary disclosure, you're leaning more towards criminal activity. Right? There's a possibility of criminal activity there. Now, one of the things I will tell you is that if you fall in that criminal activity realm, or it looks criminal and all of that, if there's a possibility of any type of criminality in your cryptocurrency transactions, that's one of those things that you need to tell your tax professional. Okay. And the reason is that there is no enrolled agent, CPA, client confidentiality when it comes down to criminal activity. You may have to involve an attorney. And so, when you're filing these returns, a sharp tax professional that knows what they're doing, that's involved with cryptocurrency, they may ask you, is there anything that you're going to tell me that you may not want repeated in court? And if the answer to that question is yes, then they're going to cut you off immediately, and they're going to get you in touch with the tax attorney so that anything going forward can be kept confidential. Okay, so that's one of those things that they don't tell you out on the street. But and then the fourth option is, of course, to do nothing, which I highly, highly do not recommend, because if you wait for the IRS to come to you before you get to them, a lot of the doors get slammed on what your options are as far as reporting. So you definitely don't want to do that. Because even if you file all of your cryptocurrency transactions and you have a tax bill that you can't pay, you can work some stuff out. That's going through the resolution process and dealing with tax debt. So there is something, you can work some stuff out when you're going to the IRS and say, hey, you know, I didn't report it. Here's where we are, right? But if you just don't do anything and you wait until to see if the IRS is going to come for you, when they do, then all of those options for just filing and paying kind of go out the window. All right. So you definitely don't want to do nothing, and you may need to choose one of these other options in order to get your transactions reported and be on the up and up with the government. Okay. So if you need help with that, make sure to reach out to us. We also created the crypto audit survival checklist so that you can know exactly what you need to have in place in the event that you do get audited. Because you don't know if it's going to be you or if it's not. So at least if you do get audited, then you can be prepared with what you need to have, and and we can definitely assist you with that. All right. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can reach out to us to schedule a 15-minute complimentary consultation. All right. Have a great day, and we'll see you all next time. Bye.